Hey folks, I'm Leo and you wanted me to share with you practical trading tips. Here you go. In this video, I'll be speaking about oscillators and particularly about the stochastic RSI. No more philosophy, fewer techniques today. Before we start, in case you wanted to catch up with my general trading advice, please check these latest videos. 5 mistakes, 5 tips, and how to make trading a profitable hobby. I've shared this earlier. Now, let's go. We have two types of technical indicators in trading: trend indicators and oscillators. On the Olymp Trade platform, tap the campus sign in the bottom left of your screen to access the technical analysis options, and the indicators will be available to you in the left side bar. Oscillators are usually charted in a separate window under the price chart. Here's what you'll see there. While the indicators line moves along with the price, it bumps into the upper zone, then the lower zone, then over again. That bouncing in between two zones is oscillation. Hence the name of the indicators. You've guessed that, right? Now, what are those two zones? The upper one is usually the overbought zone and the lower one is oversold. When something is overbought, it means its price is overheated and will likely go down at some time. Oversold is the opposite. It means the price is way too low and may go up later on. Based on these two indications, traders make their trade decisions with most oscillators. Among them, RSI is one of the most popular ones. Here is how you can use it. When the indicator line is leaving the overbought zone and crosses the 70 level downwards, open a down trade. When it moves out of the oversold zone and crosses a 30 level upwards, open an up trade. Easy, right? Well, if it was so easy all the time, I'd probably be rich by now. The problem is the price can stay in the overbought, oversold, or in between the two zones for a long time without making any crossing. So you may not always make trades using this approach with the RSI. What to do? Stanley Kroll and Tusha Chand have a solution for you. They've developed and presented the stochastic RSI indicator in their book, The New Technical Trader. Stochastic RSI is essentially a combination of the RSI and the stochastic oscillators. It is more sensitive in indicating overbought and oversold zones. That's why it can provide more entry point signals or make them even more precise. You use it in a similar manner. If the instrument price is rising and the stochastic RSI crosses the oversold level of 0.2 bottom up, it's a signal for an up trend. If the instrument price is dropping and the stochastic RSI crosses the overbought level of 0.8 upside down, it's a down trend signal. So generally, when the indicator rapidly moves above 0.8, it can mean a strong price uptrend starts forming. Conversely, quick movement below 0.2 often indicates the beginning of a strong price downtrend. Now, similar logic applies to the levels 0 and 1. Now, the excellency of the stochastic RSI comes at a price. It lags behind the RSI. What to do? Use it with other indicators. This applies to all technical tools. They may be good, but they have their limitations. So, combine 2 or 3 indicators or approaches. For example, I'd use the stochastic RSI together with a trend indicator and chart pattern analysis. There are plenty of tools available on the Olymp Trade platform you can choose from. Find those that you like most and go ahead. Forgot to tell you, stochastic RSI is one of the first perks you'll get along the Trader's Way. What is a Trader's Way? A method Olymp Trade created to make real-time trading education fun, effective, and rewarding. Check it out.